Good morning, traders. This is here, Mr. Pip again. I'm going to record my trading session as I told you guys I would. And the goal here is to learn and to show you what I do and how I do it. I just opened my chart. Gonna check the news calendar as I always do. Let me open that up here. Bring it in, and we see that today is Friday. We see that we have a crap load of news, non-farms, unemployment. Market's going to move at 8:30. So just we'll be aware at around 8:30 in about a half hour or so that there is going to be some high volatility entering the market. If we're in a position by then, we'll look at the trade management and see what our course of action would be before this news. But it's not going to deter me from getting into a trade or anything else. So that's that. We only have one news event. We can turn that off. And now I am going to condense things a little bit and see that we are currently in an uptrend. Market's produced a lower high here to this one, then produce a higher low, and then a strong new structure high. On the short-term order flow, we produced new structure high, higher low, new structure high on weakness, weak pullback, so good new structure high, expectation here, and now we've broken structure here to the downside. This structure has not been broken. Until this is broken, we will consider this to be in a complex pullback, consolidation period, or a market that's looking to possibly slowly continue back up here. It's lost a lot of momentum, has increased on the bears. We'll see what ends up happening. I would look for price to respect this area here. I'm drawing this for your benefit, not mine. I already look at the market like this, so we know that price reacted sharply to that. Couldn't quite get here yesterday, and it's been an area of structure. So now we're going to fan things up, and that's enough on that. My bias is bullish, short term is bearish, so we're going to look at this here. We see that the market produced a pretty decent new structure high compared to this one. There was still a lot of strength here. The bears increased momentum. The bulls were not able to capitalize. This market has shifted short-term bearish as this structure was broken. We'll look here. We'll draw a fib there. We see that we're in the golden zone here of a potential longer ABCD back up. That to me has it's not a very realistic expectation, as the market has shown a lot less strength after this swing here. Things have just sort of fizzled out, and then the bulls are not able to carry here. So along here presents some challenges. Price has to get past this structure area. Price has to get past this structure area here, and all of these. So there's a lot of challenges for price in moving upward. We'll wait to see what price does. This is an invitation to buy right here, but as we can see, there is little to no follow through. Expectation nonetheless on the longer term is a new structure high, not a very strong one. If we project things upward, we see that will be consistent with our expectations. Not a very high, not a very strong determination there. Now the bulls are looking to possibly take hold here. There's 117 ticks here left on this candle. We'll see if the bulls can hold on to this candle. As you can see, I don't get too involved with a lot of history and what price has done. I'm trading what's happening now, not what was done. I can assess the strength and weakness of each swing to know what's going on. We've had, major depth here in this. Overall, in the short term, we've made a new structural low. So the market is very weak on the bullish side. So this trade has a lot of things going against it from a bullish perspective, but that's still what we expect. We can still look to get into this market long and just manage our trade very aggressively. We do not want to see a close below the 786. So that pretty much brings our risk reward in a very favorable position. But there's a lot of weakness here, and being that their high impact news is coming out in about a half hour, the market may just die down until then. But we do not have a clear and decisive entry yet. We could take an aggressive entry here and manage our trade aggressively. I might end up doing that here once this candle closes.
Order filled.
Just bought this market. We had a decision to buy here. Again, we're going to manage this trade aggressively. We do not want this trade to get against us too far, risking about 11 pips. And this is in line with longer term order flow against short term order flow. We know that there's a weakness here in our direction. We know that things may die down here, especially because news is coming in about a half hour. Major news, the strongest news event of the month. But we're going to take action here. We don't let external forces influence our trade. We trade what we see, and if there's an opportunity, we take it. We understand that there is some weakness here in our intended direction, and because of that, we're going to not give this trade a whole lot of room. The trade is trying to go in favor, which is a good sign. But again, some of that underlying weakness is taking hold of this, and the bulls are just not very strong here to take price higher. I am not going to bring my stop below this structure, which would be the ideal location for this, because I understand that there is weakness here. I understand that this trade has challenges in front of it, and I need to manage it aggressively. I know where price shouldn't be if I am right. If this is going to correct and move up to test these highs, it shouldn't get below the 786. That's just something that should not happen. So we're just going to continue to monitor things. The only difference from this and a real trading session well, this is a real trading session, but as opposed to a normal trading session, is that I normally have music going so that I don't hear voices in my head. So which I don't have today, because then it will interfere with us and it will be distracting to you. So instead, I'm going to sit here listening to my thoughts as I verbalize them. These are all the things that I think to myself as I am trading. I am verbalizing them for your benefit. And again, we still see weakness here, but we still see the intent to take price higher. Immediately, we want to see price break through this area. We want to see price close above here. That would be good for our position as we await to see what happens. This candle is going to close a lot weaker than I would like it to close. As you can see, let me fan it up so that you can see things very clearly and well. Move it down. This candle here is just very weak. Half of the candle was pushed back. However, the candle still continued with the decision to buy. But you know, that was a lot weaker than the previous two candles with a lot less volume. So that's, you know, I don't like to see that, but I'm not in a position to say my trade is going to fail. I definitely see that things are getting tougher for the bulls, but they're still there. They're still showing intent to buy. They're still being able to hold on to the candle, but that weakness could invite some of those bears that are still hanging around to try to take over. So we knew that was a possibility. We knew that this trade had weakness, but expectation. So we are not giving it too much room. I am prepared to take an 11 pip hit on that. Hopefully that does not happen, and hopefully we get far enough in profit prior to the news so that we can remove or reduce our risk. I don't have any bad feelings about, you know, I am not going to say, well, news is coming out, it could spike against me, let me bring my stop down. No, I'm not going to do that. That is my stop. That is what I am prepared to lose on this trade. I accept that going into this trade, and that's it. There is no readjustments. The only readjustments I will make is to reduce or remove risk. I will never increase my risk. Okay? We'll see what ends up happening here as things are just slowing down. What I do like is that the bears are also not committed to selling yet. They're trying to make a move, but there's not a whole lot of strength to them also. We'll have to wait and see what happens here in the next few candles. It's important for the bulls to, you know, especially in areas of weakness, to continue to hold on to candles, as it would show that they are present, that they are representing. It also lets undecided buyers know that it's okay to buy. You know, with every passing decision to buy, it increases the chance that your trade will go in favor, because it lets people know that are on the fence it's okay to buy. So I know that buying will probably increase if we close above this area, because the retail traders are breakout traders mainly, or now, okay, is when indicators, the people that use indicators are starting to catch up with price and, you know, show a possible shift in direction or a signal to buy. So things may start out a little slow, because there's not a whole lot of wholesale traders like us. But as things progress, things may get better for our position, because indicators, because of the retail traders, everybody is now getting their, you know, lagging indication to that it's okay to buy. So if your trade immediately doesn't start going in favor, sometimes you have to be a little patient, because the retail people, and there's a lot of them out there, including banks, they know what levels they want to buy, but there's a lot of banks that are indicators based and wait for certain, you know, black box systems to produce the signals. I know a couple of institutional traders, and yes, they use indicators. They can't figure out how we can predict the market. So it's a unique skill. I think we're fortunate to have it. And it puts us in at a much better risk-reward profile. As you can see, this trade is now progressing in favor. We may get that opportunity to remove or eliminate risk, or maybe even take profit. We see things really die down up here. We'll see how we handle that, depending on what the candles tell us. We got the close we wanted to see, kind of, sort of. We want to see this candle close and finish strong. We definitely want to see price break above this area here. This is the first trade of the day. Luckily, it happened right at the beginning of the session, and puts us in a better position once news comes around to have the opportunity to possibly remove some of that risk. I am trading 5 lots, as you can see. And we'll see what happens. If you want to see what the P&L looks like, that's what the P&L looks like. See, 1 pip is like 50 bucks. See, I don't like to trade this way because I think, you know, even though I'm psychologically stable in my trading, it's still a, you know, still gives that little bit of that room for those emotions to come in when you look at a dollar figure. It's best to detach yourself from the value of money when you trade, you know, and concentrate on having a high probability setup. Concentrate on the order flow. Concentrate on the things that keep you profitable, and you know, put those negative things or things that could influence your decision making process in the background, if that makes any sense. So we'll see that we're up 6 pips. 7 now. Trade is still progressing, slow but well. The candles are not really trying to get bearish on us, as we see that there's very small, you know, the tail lessened here and here. But yes, price is struggling to climb. I would like to see it close above 48 here. That would be important. Don't like this candle here. The bulls need to hold on to this candle, need to not let the bears come in here. We're about 15 minutes away from high impact news. The bulls need to come on, take it higher. There we go. Good job. Now we can take a measurement here, see where we're at. I'm going to erase this one so I don't confuse you, and know that we're approaching the 618. My expectation is a new structure high. I'm going to remove some of my risk. Not going to remove it completely, but I'm going to remove some of my risk. I'm only risking 2 pips here. Normally I would wait to remove risk so I have more room. However, I did see an intent to sell off here. It came very close to my entrance. I am getting closer and closer to high impact news. I would like to get higher into this so that I can remove my risk altogether. So when you take trades like this, when you take opportunities like this, they are high probability trades, and they usually do work out. They work out a lot more than they haven't. You know, as you can see, I have taken some losses this week, but I have been profitable every day. So it allows me the confidence to believe in myself, believe in my process, believe in my trade. But even if I haven't been profitable every day, I know that I'm going to be have a very high chance of being profitable throughout the week. Now I'm talking more than I should just to fill up the dead space here, but I also want you to understand, you know, that trading is not about one setup. It's not about, you know, one day. It's about you know, the weeks, the months. It's about money management. It's about handling and managing your business. Your business revolves around trading, you know, and if you allow this to, you know, one bad day to ruin your process and to make you think that you need to start changing things, well, then you're just destined to fail. I believe that that is the reason why so many fail in this business. And, you know, I think the best way to characterize this for the people that are coming into this, or the people that are not in control of their emotions, I think trading is like somebody with bipolar. There are major highs and major lows, you know. But once you take control of your trading, you own your process, and you follow a system that has positive expectancy, then that's like somebody that has bipolar medication. They balance it out, okay, and they function well, okay. But those emotions are never completely removed, but we control those tendencies and those impulses with rules that we follow consistently. Okay, do I follow those rules every day? No. Do I sometimes break them? Yes. Okay, because sometimes it's hard. Because sometimes you just say, you know, like, now, wow, I have 14 pips of profit. I'm 15 minutes, you know, from news. You know, all of the gurus, all of the experts, all of the teachers, you know, say that never get into a trade 15 minutes before news. You know, manage your trade, people. Manage your trade. Get out of your trade when there's a reason to get out of your trade. Don't get out of a trade because of a hypothetical situation. Okay? Trade the facts. Trade what you see. Okay? You'll thank me for it, and so will your bank account. Okay? Now, I am going to remove my risk completely. Why am I doing that? Well, I'm not testing these highs yet, but I am at the 786. I did get through these two areas here, and my expectation is still a new structure high to about this area. We'll see how price gets there. Notice I have not moved my take profit there to be automatically taken out. I'm keeping it up there. I will drag it as need be. I'm hoping that we can test these highs prior to the news, and I may just take it there, only because price had a pretty strong reaction to it, had a very deep correction. And although I expect a new structure high right before news, I wouldn't want to give all that back right before. But we'll see. We'll see. Price may just have one strong, nice push up there and take me out. I see price has been accelerating, which is good for us, which is good for our expectation to see price accelerate. This is where the indicators are catching up, and where people follow indicators. This is what I was telling you guys earlier. You know, that there could be a moment of dead space once we enter, and then things materialize later because the indicators haven't caught up with the majority yet. So now we expect this high to be taken out, but price may get stuck here and show a little bit of resistance, as price did here. Okay, but right now things look well. Okay, we'll see if price can get up here to our take profit. It'll be a nice little trade right before news gets out. Ooh, see, this is what I was talking to you about. Okay, let's do something. Let's do that. We're right before news. No sense in getting crazy here. You know what? Let's just close it. It's a lot of rejection.
Order canceled.
Okay, so now we took our profit. You know, I took it for a couple of reasons. That's a whole lot of rejection. That's a whole lot of move back down. This may correct back down into a lower high. On the short term, we knew we produced a new structure low. So this is also a possibility here. Better safe than sorry. We can't overlook this fact. We can't overlook that price could not close above this and even rejected it pretty harshly. So even though price may still work out and get up here and news may take it into the stratosphere, we're protecting our trade We're not going to give more than we need to back to the market in this situation. So that's fine. We'll watch it. We'll evaluate it, and we'll see if we can predict if price is in fact going to follow expectations and close above this. Okay. Oh, where are my markers? Don't know why the markers didn't turn on. Okay, those are my markers. That was my entrance. That was my exit. We'll identify that for you. $17 pips. Like those green pips since we won. Nice start to the day. Money in the bank. Show you what that looks like real quick. Account performance. Today. $850. Nice start. And that's the other thing I wanted to talk to you guys about. Some of you are starting out with real small account sizes. You're trading micro lots, mini lots, especially after you figure this out. Even if you had a big account, you know, there's no need unless you need to pay bills, you know, but you shouldn't be needing to pay bills with a large account and trying to figure out how to trade. That's a recipe for disaster. But, you know, once you do grow your account, once you do get to where you want to get, you know, there's no need to make 100 pips in a day. There's no need to make 50 pips a day. Okay? As long as you're consistently profitable on a daily basis. And what does consistently profitable on a daily basis mean? It means that if I, you know, on a weekly basis, I add all the pips that I made that week and divide it by 5. Okay? If I get a positive number, then I am consistently profitable. Now, if I can do that for 2 or 3 months straight, where I am consistently profitable on a daily basis, it is almost an impossibility, okay, to lose money. Okay, everything else comes from money management and proper position sizing. Okay, to put yourself in a position where you can grow your account, okay, and build wealth, fortune, whatever you want. Okay, because I don't need to make, okay, 100 pips a day to make $1,000. Okay, if you can average 20 pips positive on a daily basis, okay, you can make all the money you want in this business. It doesn't take a whole lot, okay, but it does take money to make money. Okay, and once you're properly funded, okay, you can just trade for 20 pips a day. Not stop at 20. You're going to take your trades, okay? Because some days you're going to have a losing day, or you're going to have a bad day, and some days you're going to have a great day. When you average it all out, it balances out to about 20 pips a day, you know, positive expectancy, and with proper position sizing, you know, you can make all the money you want. So don't get hung up on, you know, going into a trading session. Man, I need to make 20 pips a day. Man, I need to make 50 pips a day just to cover my expenses. No, you're putting undue and excess pressure on yourself right before, okay, you get into a very intense situation. Now notice that my process was simple. My decision making was clear. I did not hesitate on my entrance. I did not hesitate in my trade management. Okay, I made decisions based on what I saw, and we knew that this was an area the price could just come back down. It happened before. We saw major rejection. I took the profit. I'm okay with that. I can live with that decision. Okay, no big deal. Okay, 17 pips is a great cushion to start out my day. Okay, now price is continuing on here into our what was our termination point here. However, there's a lot of strength there right now. I will not look to short this anytime soon. I will need to see a a good signal. We may not get that prior to the news because price is probably going to stall anyway. We'll draw some extension lines here. Fibonacci extensions. Swing low, swing high. We have a minimum expectation of a 127 extension here. We'll see what ends up happening here. If this was to retrace all the way back down, I still would not take this short, as risk reward will still be unfavorable. Okay. So right now price has every intention to keep moving higher, which is great. We're not participating in that. Again, not upset. I made the decision that I made and I stick by it. I am fully accountable for my decision and cannot be upset for them. Would it have been nice to stay in the trade? Yes. Did I break a rule? No. I protect my trade always. Sometimes I get taken out earlier than I should. Sometimes I get, you know, really nice runs. It's part of the process, you know, but I didn't lost my train of thought. Sorry guys. Not used to talking so much while I trade. Nonetheless, we're going to be on the sidelines here for a little bit. We're going to see what news does. And notice I didn't let any external forces control my trade. I did take them into consideration. This for me was a indication to protect my profit, get out. Price could have corrected here. So I stand by that decision, and that's that. News is going to be coming out anytime now. We would have achieved profit target. My profit target was set up here. We would have probably achieved that. We left, let's see how much money we left on the table. $25. So we left 8 pips on the table. Not a huge problem. But see, this is why, you know, especially non-farms payroll, it's such a pain in the ass. I mean, look at this. Does this make any sense to anybody? What is this? These are the institutions just clearing out all of these orders, taking out all of these stops, filling in their huge positions so they can take price wherever they want. There's no way to trade this profitably. There's no way to predict which way it's going to go. You know, more than likely, and almost always, I'm going to say almost always, price tends to follow longer term order flow. Okay, and in this case it did. What happened? Price came back, long term order flow. This is the low, right? What did price do? Just come back to test it. You know, now price is moving on to new highs. Okay, but if we would have been anywhere still in this trade, we would have been taken out at a break even, or lost money, depending on, you know, where was my original stop? Down here, right? Where did price go? Banks are not stupid. They know where people's stops are. You know, they're traders too. They know what's logical and what's illogical. They know that if people are up here long, they know that their stops are not below this. They know they've already either locked in profit or reduced their risk significantly, especially prior to the news. They know that. They're not stupid. You know, and if you think they are, then you're the foolish one. So we're just going to let price do its thing here for another 10 or 15 minutes, and then we're going to come back. So I'm going to pause the videos just so that it doesn't get on and you don't hear me ramble, and then we'll come back and see if we can get into some more trades. As of right now, we're up 17 pips for the day. Nice quick trade. Left about 8 pips on the table to our profit target. You know, I think that that's an excellent trade. You know, and what you want, I will say before we go on before I pause the video here, is that, you know, if you're taking about 70% of the swing that you're trading, okay, you're trading at a very high efficiency rate. Okay, to take 70% of a swing is huge. What I mean by that is, you know, if this swing has, you know, from its low to its high, I guess, no, here, okay, it's 40 pips. If you're taking 70% of that, okay, you're trading at a very high efficiency rate. That is really, really wholesale. Okay, most retail traders are taking, if they're lucky, 50%. Okay, because they're getting in late and they're getting out late. Okay, because of their indicators. So if you're anywhere near the 70th percentile of efficiency, of positive expectancy, then you're doing great. Okay, you're doing really great. So again, I'm going to pause this video, and I'll be back in a few. Okay, traders. So back here, about 15 minutes later, and we see that, you know, the news broke structure here, which was that line that I had identified to y'all, and price made a very weak new structure high here and immediately went down, made a new structure low, then a lower high, then a new structure low, all in a few bars. That's to be expected with this sort of news event. So now, where do we go from here? What's our expectation? Well, our expectation from the immediate here is for price to be able to get back and test this area again, to then decide whether it wants to continue downward or to push back above it. Okay, right now we have some acceleration and determination in price to get lower. So any longs that we would consider taking poses a much greater risk as you're trying to catch a falling knife. Okay, so we're going to be cautious with that. We need to come back into our condensed view and look at the structures areas. We see that we have some structure here at the 90 mark. We see we have the round number that has not been, you know, it's been broken down, broken up, broken down, broken up, broken down, broken up. So there's not a whole lot of reliance. This area is not too, we can't depend too much on this area for it to act as a support area. And it's been broken up, down in every which way. That severely weakens the structure. So therefore, see the difference here, here, here versus here. It's just not a dependable area. There's no real support there, or nothing that you could say could hold, you know, this brick from falling. So because of that, even if we do get a signal here, it would pose a tremendous amount of risk, as this area will most probably fail. We see that we had an invitation here for some buying, and it looks like it's going unanswered. Nobody's showing up to that party. So more than likely this area is going to be broken. We already know that going into this, because we are empowered, because we can read the chart, because we can read price and know that there's a very low probability that this area will hold. Now, can it hold? Sure. Okay, but what are the probabilities? And that's what we're trying to do. We're trying to align the probabilities, okay, with our intended trade. The more probabilities we have on our side, the stronger our signal becomes, the higher probability of a successful trade. Okay, so we already know that there are challenges here. We already know that price is probably going to break this. So I am not looking for any longs here. I rather price find a little bit of support, try to pull up, show me some weakness, and then I will feel more comfortable as to taking downward. Why? Because structure has been broken. this market is now shifted, okay, back bearish. Okay, so we are looking for price to continue to push lower. Okay, so we're just going to keep monitoring price here. The next area here is that might catch price is somewhere around here. This area is probably better. Oops, sorry, wrong key here. Somewhere in this area. Okay, price is showing now it trying to correct here. I still stand by my assessment that this round number is extremely weak. We expect a weak pullback anyway. We no longer have any needs for these fibs, so we're going to get rid of them. And we're going to take a look at this. We expect a weak pullback. I don't expect the pullback to get here, but we do see the price did in fact find support here. Not upset about it. Not wishing I would have taken this trade. I knew it was low probability. Okay. So, and taking it up here where I have the decision, risk reward wise sucks because I expect a weak pullback to begin with. So why would I trade this up anyway? Okay. The price can get up into this area right here. That is the structure area, the strongest structure. We already knew that because we identified that earlier. And we'll see what ends up happening. Now, it's important to wait for price to come to you. Okay? Don't go chasing after price. Say, man, look at this. It went up. I need to get in. I need to get in. Price is going to go up. What are you trading into? You're trading into resistance right here. Is it worth it? No. Can price go all the way up here? Yes, price can do whatever it wants to do. But we trade with an expectation. We wait for price to come into an area that we believe, based on our analysis, our process of price should, okay, come to. And then we know the decisions are going to be made in this area. So we wait for the confirmation, okay, and trade it. I wasn't going to jump in long here just because it's a round number. Just because I saw this little bit of rejection here. Just told me there was a little bit of weakness there. That's expected around round numbers. Why? Because they're psychological barriers. Okay. Now this has more strength than I would expect. I wasn't expecting price to get this deep. Okay. So this is all very interesting. We'll see if the structure ends up holding. We'll see if we get a confirmation here that price is going to come back down. It would be atypical for price to come all the way back up here. That would not be a normal expectation of this. We expect a very weak pullback. So far, we haven't gotten to the 38%. So right now, price is still behaving in line with our expectations. That has not failed. The structure is here. Price tends to come back to the structure area. It touched it. It rejected a little bit. We'll see. Do we have a signal here to go short? No. What we have here is weakness. That's all we have. And if we miss this trade too, we miss this trade too. We're not going to chase after it. We have to be patient. We have to be hunters. We have to understand, okay, and wait for the shot to be prime before we take it. There's still buyers here, as you can see. Price is still trying to climb. They might not be strong enough to continue to take price higher, but what happens if you would have entered here? Right now, you would have been like, damn. Okay? Good trading is about knowing when to time your trade, timing your entry. Look at my entry here. Price never went against me. Okay? So, we're going to try to achieve that here as well. I'm looking for a short. I see a little more momentum that I would like to see. My depth is still in line with my expectation. Okay? Now we're looking, okay, for a confirmation, okay, that the bears are entering the market. Okay? We don't have that yet. We saw a glimpse of it here as price got rejected. Rejection is nothing more than weakness. I want all of you to know that. Okay? When we have a rejection of a candle, that is by no means an indication the price is going to reverse there. All it means is there is weakness there. Okay? That the driving force got pushed back. Okay? They weren't strong enough to maintain that level. All that means, when you look at it, is weakness. Nothing more. It's not an invitation. It's not a turning point. Okay? That's why I don't trade candlestick patterns. That's why I don't trade dojis or pin bars. Because those are all just weakness, an area of weakness. It doesn't mean price is going to turn there. Does it turn there? Yeah. More often than not sure. Never looked at it. Okay? But right now, we're looking for an entry short, and we're going to wait for the timing to be right. We're going to wait for price to tell us that the timing is right. We're not going to enter here because there's structure. Because price is telling us and showing us that it can still climb higher. We're disciplined. We don't get anxious. We don't rush things. We let price speak to us. You know, and we're always evaluating our expectation. Okay? This was our expectation, for price to come back to this area, for price not to get this high. We see that now we have some of that invitation playing out. Now, I don't like taking a trade here because it's expensive, risk reward wise, but that's a damn good signal. So I probably will take it at the close of this candle. I need to see how this candle closes, particularly in this area. And this is why we wait for candles to close. Because what does this tell you? That there is intent, but there is still weakness here. The bulls are still able to take price higher. We don't rush things. This could very well be, this is the invitation right here. We did see the intent to come into the market, but they were not strong enough to hold on to their candle. They didn't even hold on to 2/3 of it. They barely held on to 1/3. Okay? So this candle is important for the bears. Okay? The bears are serious about taking price lower here. They need to follow through on this candle. Okay? Right now, all that we have here is an indication that price wants to correct here, wants to continue on downward here, but are not strong enough. That's all it says here. Okay? Is that a signal for me to enter? No. Okay, could it be a signal? Yes. That's an aggressive entry. All we have is an invitation, an intent. Okay, now the bears can hold on to this candle. Okay, now that shows, okay, that decision. It shows that the bulls are not strong enough to keep taking price higher. It's a much stronger signal. Can it still fill? Yes. Okay, we'll still manage it. However we need to manage it, yes. Can we give this trade a little more room? Yes, because we're in the direction of order flow. We're in the direction of market strength. Okay. I don't mind entering a little late sometimes, as long as it doesn't get too expensive. What I mean by expensive is I'm entering too far into support. So my risk, okay, is pretty close to my reward. I don't like that. We got about 50 ticks left on this candle. We'll see if it can hold its own here. Yeah, hope this is probably going to head higher, guys, for now. I'll be surprised if this candle, if this, I don't think it's going to head too much higher, but the bears are just a little too weak here from this underlying strength. This is why it's important to wait for a good signal. This is how you time your trade in properly. I just showed you how to be patient, how to read price, how to read these candles. This shouldn't be happening. We know that this was our expectation. Price tried to correct there, but it wasn't strong enough. You see they got pushed back. They were not able to hold on to their own will. Therefore, taking a trade here short, even though it was in line with the expectation from the bar by bar, we did not get the signal that we needed to get, and we didn't take the trade. As you can see, look at the difference here. When I took this long, we had intent, we had decision. Here we have intent, we have no decision, and therefore weakness succumbs to strength. Price was going up, and price continues to go up. Okay, where to now? Well, that remains to be seen. There's no clear structure here. The clear structure we have is about this level here. We have here, here, here. We have a little area here of support and resistance. Nothing too strong. But we'll see how price reacts to that. So it's important for you to always think along these lines, especially when you're thinking about entering. This helps you tremendously in that fight to time your trade entry right. You know, to not enter a trade and say, crap, it's going against me. Till when? Till where? Now I'm in drawdown. Letting those, you know, damn emotions creep in. Where's your stop? Well, technically it should be up here. Well, what about your risk reward? It sucks, right? Know where price could be, shouldn't be. Wait for your signal. Wait for price to confirm to you it's okay to enter. We did not get that here, so I did not enter. Okay, level 2 right here. Okay, level 3 up here. This is where price might end up going. Would I like to see price get that high? No. Because that tells me that my expectation of a new structural low has become weaker. Why? Because we have a whole lot of strength. Look at this projection to the downside. Should we get deep correction? No. We shouldn't get a deep correction. Should we be up here? No. Should we be up here with the amount of momentum that we're seeing here? Absolutely not. Okay? But it is what it is. Okay, these are the facts of this case. We're still looking to short this market, but we have to wait for the proper signal. because price is showing us that it wants to climb and that it can climb. Okay. And this is looking far better right here. Candle close at its lowest point. Remove 2/3 of the previous bull strength here. This is a very strong invitation. We want to see some follow through now. Looks like we're sort of getting that. I don't want to let this get too far away from me. I'm not going to enter just yet. I would like for see the candle close. You know, we're still seeing those bulls hanging around here. Okay, and this is part of trading. It may be boring. It may be tedious. It may be exhausting for some people, but I'd rather take my time and trade and give my trade the best probability than get into a trade too early and have it go against me 10-15 pips and then have to try to make a decision. Hey Molly, it's my dog. She keeps me company sometimes. She's an old dog. She's a senior citizen. Stop, Molly, I'll let you out now. Okay, so the decision is being made here. We will most probably enter this on the close. Not happy with this expensive rotation.
Order filled.
Not happy with the expensive rotation, but we will take it. It's important to understand that price could find support here at this round number. Our expectations for a new structure low. Going to move down my risk a little bit to just above the structure area. We want to see price continue on downward. We are seeing momentum increase. We are seeing the bears continue to attempt to drive, which is good. Our rotation here was a little expensive, but we needed that confirmation. Like I said earlier, I don't mind entering a little late as long as I have good confirmation. And here's another trade that at the moment has not gone against us. Timing our trades is extremely important, guys. I can't stress that enough. And once you learn to time your trade, to be patient enough to wait for that timing, even if it's a little more expensive than you want, but you have the information, okay, that helps you confirm your decision, to confirm your expectation. Okay? Now this may still turn around against us. We're not in a position, we're still at risk here. Okay? We have not gotten through these lows yet. Okay, should price be able to do that? Yes. Okay, but I'm still at risk here. I'm still risking 10 pips. Okay, I don't want to leave my stop way up there because if I'm right, price should not get back near these highs anyway. You know, I got major structure here. I'm just above that. We want to see price continue here. It's important for the bears to hold on to at least half of this candle, and for the next candle to immediately try. See, this is not good. This is not good. This is weakness on the bears. See what happens here. Notice I'm not stressing out. Notice I'm not saying, oh crap. It is what it is, folks. We manage our trade. No emotions. If we get taken out, we get taken out. Okay, our expectations for a new structure low, and we need to see the bears here continue to take price lower. I am protected. I have a favorable risk-reward profile on this trade. I have no reasons, okay, to abandon this trade or to get out of it early and to take my stop and move it back above here. That would be increasing my risk more than I should be, because my expectations were clear, because price confirmed them, because I had a decision to sell. Now the bears should not be allowing this candle, so it's important for the bears to hold on to this candle. Okay, they're a little weaker than we expect them to be here, but it would also be atypical for price to produce a higher low here and then a new structure high. We'll see. But this is a high probability setup. It was a little more expensive than we wanted to see. We just have to be patient. Be patient and see what happens. Bears need to take on to this candle here. This candle is critical for the bears. Critical, critical, critical. We're just going to be patient, evaluate it, see what happens, understand what we should expect, understand, process what we get, and see what's happening. I've told you that this candle was extremely important for the bears, and as we can see, the bears are trying, understand that as well, and are trying here. And if the bears can't take this candle, then we find ourselves in a very unfortunate situation, as our trade expectation has severely weakened if the bears cannot continue to take this market. Okay, so we'll see what ends up happening here, but it's extremely important for the bears to hold on to this candle. Otherwise, our trade, okay, has weakened even further. I hope you guys can understand and appreciate that. Now, this is the process that I go through in evaluating my trade and the progression of my trade. Okay? Ideally, we will want to see this candle close lower than the previous two. We know that they can do it. We know that they can get down here. They already have. Okay? We know that they were a little weak here. They got pushed back and they got driven back. Okay, now the bears need to grab hold of this market again. Okay, They need to be able to do that. Okay, it's important also for you guys to understand that until the bears can close below this market cannot go any lower. It's an impossibility. So it's critical for the bears to show any resting traders out there that, you know, it's okay to sell if they can't even close below this. Okay, but they were able to hold on to the candle. They still did not get the close that we wanted to see, but they are able to hold on to that candle. That was important. Okay, now they need to keep driving. They need to keep driving. It's not good that price is just stuck right now. It's not moving up or down. This is not good for us. It confirms weakness on the bears. Nonetheless, our expectations still remain valid. We still expect that new structure low. And that's what we want to see. I sometimes talk to the bears, and sometimes talk to the bulls. So let's encourage the bears to continue to drive price. Come on, bears. Show me this is your market. Let's go. Give me that close. Come on. Keep going. A little more. Actually, a lot more. Okay. We know that they have a pretty clear path to down here. Okay. Will that happen? Hopefully. A 1-to-1 to the downside is monstrous. All the way down here. It's probably a little unrealistic. However, at the very least, we do expect a new structure low. That is our expectation. And we know that our expectations play out at least 70% of the time. So because of that, we have to feel pretty confident that that will happen. But until that happens, it's just an expectation. And we still see that they're weak here. Definitely did not like that candle. They need to hold on to that candle. They barely did. You know, they got pushed back all the way, but the candle still closed negative, still closed lower than the previous. The decision to sell was still there, but a very, very weak one. This is not good. They need to do something here more drastic, or we're probably going to be in a losing trade, which is fine. As you can see, I'm not readjusting things. I'm not changing anything. My reasons for being in this trade are still there, but I'm not going to move my stop here, way up here, as that is not something I am prepared to do. I know that I've always told you guys that in the direction of order flow, I give my trades a little more room, but in this particular situation, I am not going to do that. Price should not be farting around here. Price should be moving swiftly to the downside. It is not. Right now, we've made a weakness, possible high or low here. This is a trade that we're probably going to end up losing if the bears don't get serious here real quick. Okay? It is imperative for the bears to turn on the force here immediately. Again, we're just waiting around, waiting to see what happens, evaluating this. And I want you guys to understand, you know, the patience that one must have. You know, we know that our trade is weakening minute by minute, candle by candle. Our expectation is weakening. Our trade is weakening. Okay? But until it has failed us, it still remains valid. Okay? And sometimes that takes time. And sometimes there's nothing to do but just sit and suck on it until you're either taken out or the trade moves in favor and you can reduce risk. I can't remove any more risk than I've already removed. I am below the structure. I am below a possible retest continuation. Okay? But that's okay. That's okay. Based on this strength, based on what we saw here, based on this reaction, we should not get near these highs again. We should have also continued lower already. Okay? We know that our trade is severely weakening minute by minute. This is probably going to end up being a losing trade. But I have to give the trade, okay, the room that I've given it. I don't want to afford any more room than I have already given it. Especially knowing that I am against the 8 ball here now and that my trade is weakening in my favor. Why would I increase my risk? Okay, that's almost guaranteeing an even greater loss. It's unnecessary. Okay, I know that the bears, okay, with every passing candle are even more desperate to take price lower. Okay, now with every passing candle that the bulls cannot take price higher, that's also helpful. Okay, but still weakens the bears, because the bears are struggling to keep the bulls from climbing, and that's exhausting. Okay, I look at each one of these candles as a battle, you know, and it is important for the candles, okay, for the battles to be clearly won. And here no side is clearly winning, other than the bears are weak here. But we also see that the bulls are not entirely all that strong also. I mean, they're being pushed back still. The bears are still fighting. This is good. Okay, but the bears need to show them who's boss here. Okay. We just have to be patient and let price do his thing. There's nothing we can do. Okay, we just have to be patient, continue reading, continue to adjust our expectation. Okay, and immediately we know that we need to get a close below. We need a candle close below the 12 here. This is critical. This is critical for our position. Until we get a close below this 12, we do not have any confirmation that, you know, price is going to, you know, possibly get lower here. You know, we've had 2 attempts that failed. See, none of these candles, not this one, this one, this one, this one, this one, this one, or this one, have been able to close below there. Okay, so that's on a micro scale, that's a critical level for the bears to get past, and for the bulls to not allow the bears to get past. Okay, and the bulls are winning that battle, which is not good for us. Okay, so it's important for the bears to get below the 12. Extremely important. They know it. Let's make things fatter to see. That way you guys don't have to strain your eyes. Okay, this is a situation, again, this is bad. We knew this. This is very bad for us. Very bad for our trade. Are we going to increase our risk because of this? No. I'm going to say, oh, price may hold here. Price may hold here. Why? We've made a higher low. What's our expectation? New structural high. Why am I going to increase my risk? Okay. Yes, could price, test this and come back down? Well, if that's the case, I'll re-enter short. I don't care. But I'm not going to increase my risk unnecessarily because this may hold. No, the expectation is for this on a short-term scale to fail. Okay? The bears need to take over now. Need to show the bulls who's in charge, whose market this is. This is a bear market, not a bull market. We traded with order flow. We're trading expectations. We took the right trade at the right time. We took a high probability trade. If it doesn't work out, it doesn't work out. Next trade. But we're not going to start playing games of increasing our risk, of adding to our losing position or any of those destructive things. We follow our process. We follow our rules. And it's that simple. This is a grind. And it's frustrating. It is exhausting reading all these candles and reading strength and weakness. But it is what it is. And this is part of the business. So I'm glad it's happening. I'm glad you're seeing it. And I'm talking through it because I just don't want to sit here on a dead mic, Good. This is what we want to see. This is what we want to see. Get down there. Make a lower close. This candle still has a long way to go. It's 142 ticks. But we definitely like the way it's shaping up so far, right? Not cool. Guys, I'm going to step away for a minute. I'm going to leave the mic open. I'm going to open the door for my dog. She's telling me she wants to go outside. Hey, Molly, come on. Candle's still trying to fight. I mean, this is not good or bad. I mean, it's more good than bad. We're seeing that there's still intent to sell here, but until the bears just take control and close below that 12, it's only intent. Good. Okay, this is good for our trade. This is a step in a better direction. Okay, so now we want to see price continue to push lower and close below 03. Decision has been made here to continue to sell, loud and clear. Now we need follow through. Okay, from a bar by bar, you're getting a lesson today in bar by bar and trade management and information processing. Okay? again, price is behaving in line with our expectation. We want to see a close below this. Sometimes things just take a little bit of patience, guys. Understand when a trade is working in your favor. Understand when a trade is weakening on you, and take the appropriate action. No action needed to be taken. Okay, but was it a cause for concern? Yes. Did we evaluate what was happening here? Do we still need price to close below this? Yes. Okay. Our expectation is a new structure low. Can that happen? Price got near this round numbers. Round numbers, even though it hasn't done so in the past, is showing some buying happening here. Okay. Some pretty strong buying came into the market at this level here. You know, but price pulled back into an area it pulled a little higher. Whoopie-doo. You know, but still, you know, there was some strength here. Okay. We could expect price to show some weakness here. Okay. But on the very micro scale, what do? We did a higher low, lower high, new structure low, right? It's important. Okay. Now price needs to continue. Decision was made. Decision was remade and carried. Now the bears need to close below this. You know, they definitely have the strength to do it. They need to close below this. Am I in a position to remove risk? Yes, I should remove risk. Why? Because this low was tested and price rejected it. And now they're showing a little bit, where was this line there? Price is showing a little bit of hesitation there. So let's remove some more risk. We're up 6 pips. Let's cut our risk to 2 pips. As price should not get up here. If it does, it does. We get taken out, we get taken out. Okay? I don't mind losing 2 pips. Price did find strong support here. My expectations for price to get below this. And it should be able to do it before it climbs up. Let me check on my dog real quick. I'm protected on both sides, so there's nothing to do. I've removed my risk considerably. And, you know, because I went short here. You know, I would wait for the 382 to remove risk. Normally I would have entered up there, but I didn't have a strong enough signal. So I'm here in the golden zone of a move potentially back up. So I can't remove my risk completely because it's too close to my entrance. I don't have room to give the trade to work. So I need to remove risk. It's appropriate to remove risk, but I also need to give it a little bit of room. So I can't remove all of my risk. And I say that because if I remove this, which I don't think I need anymore, hopefully, and I draw a swing here. See, I knew I was in the golden zone. I can sort of see these things already, but I knew I'm in the golden zone of potential move back up. There was weakness here. They found a little bit of strength here, so the bears need to hold on to this candle. If they don't, will I consider getting out of this trade? Possibly. Why not take 5 if you know the price is going to possibly have a higher chance of not achieving this? Right now I don't have that inclination. Okay, I still believe in the bears. I still don't have reason to get out of this. I haven't had a decision to buy yet. This is an invitation to buy. An intent to continue buying has been met with some failure. Okay, so we need this candle to not close bullish. The bears should have enough strength here to prevent this candle from closing bullish. We'll see. Yeah, we're probably going to lose this trade, guys. It's okay. We didn't take a full loss. This still may still come down after it takes us out.
Stop filled.
Okay, we lost 2 pips. No biggie. We're still up 15 pips for the day, and we're evaluating our next opportunity. Now I'm looking here how we made a very deep pullback, higher low. We had strong intent to buy. The bears unable to capitalize and make that new structure low. This may be a rotation here into a deeper correction, or possibly even a retest of these highs. So the bears can't do anything here. I'm gonna take an aggressive entry long as and just manage it very carefully. I'm gonna make things a little thinner here. This is getting away from me. So
Order filled.
okay, we're gonna go long here. Our risk is again about 10 pips. We definitely want to see now this is where the bears are going to go ahead and just make that new structure low. But this is a pretty strong indication to me that our expectations might fail here. I mean, look at the underlying strength here. Look at the weak pullback and just look at the not very strong commitment to keep going here. I may be wrong about this, but again, it is what it is. You know, we can only look at what we have here. We're trading against expectation. I can't remove much more than that. I'm below this close, okay? But the bulls have consistently tried to enter this market and be able to keep the bears from dropping. So, seeing that there's a stronger force to buy than the one to sell has led me to this possible fact. Okay? So, let's see what ends up happening here. I'm probably not giving this trade a whole lot of room, but I cannot be too lenient with this. I am against long-term expectation. I am with short-term strength right now, I believe. And we'll see. These areas are complex. It is hard to read these areas because we're looking at a possible shift back up against long-term expectations. We'll see. Resistance is right here. So, I mean, not the best place to take a long, but expectations are expectations. And we're trading a short-term expectation of a possible ABCD to the upside into this area right here. It will still be consistent with a lower high into an area of structure. ABCD completion to the upside on a shorter term order flow, and a continuation on that overall new structure low. That's a possibility here. We see that this market is trying to get bullish again. We'll see what ends up happening. You can't be afraid to take a trade. You can't be afraid to make a read and make a judgment call based on the facts that you see and build that case for entry. Do I know this trade is not as high probability trade as the one that I took earlier that lost 2 pips? Yes. Am I against short-term order flow? Long-term order flow? Yes. But what is strength and weakness telling me? What is order flow telling me? It's telling me that the bears really breaking down here. It tells me that the bulls are serious about wanting to buy this level. Okay? But they had to fight off all this underlying strength first. They showed strength here. Okay? There's a clear shift between this, and this. Okay? Basic order flow fundamental fact that the bears have broken down here severely. So my expectation is changing to a short-term new structure high. But until that happens, it's just an expectation. This thing could just roll on over and keep going down and take me out again. But we have to trade what we see. We have to trade our expectations and know that sometimes they fail us. But we trade with a good risk-reward profile. We're very diligent about removing risk when we need to. Okay? And that's what keeps us profitable. You know? Because I took 17 here. I lost 2. I'm still up 15 for the day. Okay? I know the price should have made a new structure low already. Price hasn't been able to do that. There is extreme weakness on the bears. That doesn't mean they can't achieve that. Doesn't mean they can't pull down and do that and take me out again. But that's 2 losing trades over 1 winning trade, and I'm still positive for the day. But did I put myself in a position to compete? Did I put myself in a position to win? Yes. Did I attempt to align myself with the strength of the market, short term and long term? Yes. Okay. But price is going to do what it's going to do. The only thing we can do is, you know, when we have a situation to enter, we enter. And then we manage our trade. That's all we can do. Manage our trade. Think about capital preservation. Think about removing risk, especially when things get complicated on you. When things break down on you, it's even more important to remove risk. Okay? There's weakness here in the bears. We definitely want to see the bulls take things higher here. Why? Because now I'm on the bull side of things. So if I take a loss here, I took a loss. You know, I'll be down 12 pips for the day. So I'm still up 7 for the day. Made 2 decisions based on the facts that I had that didn't work out. No big deal. This is how I trade. And the results are pretty darn good. But every day you can't be a superstar. And every day you can't have 100% wins. Yesterday I had 100% wins. But if you can keep your losses small, understand the risks that you're taking, you know, you're going to have great risk reward profile. And this is pushing on 1 hour and 37 minutes. So even though I still have 2 hours left in my trading session, I'll probably cut it off here so it won't be too boring for you guys. I'm going to cut it. I mean, we'll wait for the, we'll see this trade through one way or the other. And then I'll cut it short so that you can not have to sit here through 2 more hours of this. It is Friday. I typically don't like to trade on Fridays just because I believe the price action is not very good on Fridays. Most of the time you're plagued with either a lot of news and swing traders and long-term traders getting out of trades on Fridays. Nobody's really getting into any trades, particularly any swing traders, because they don't want that weekend gap situation. So Fridays are just not great trading days. I used to exclusively not trade Fridays, but lately I found myself trading them, trying to make the best of the information you have. I expect the bulls here to be able to carry this candle, make a new high in the short term. I expect them to be able to close above this. We showed strength, then weakness, so we should show strength again here. We want to see the bulls close above 18. If they can achieve that, that'll be great. All I'm doing, guys, is applying everything that I've taught you. Okay? Swing by swing. Identifying strength. Identifying weakness. Having expectations. What's the long-term order flow telling me? Is the short-term order flow confirming that? No. Breakdown. Okay. Is it safe to take a trade in the short-term order flow? Yes. Okay. Is there higher risk in doing that? Yes. But you have to put yourself in a position to compete. Otherwise, you're just sitting on the sidelines watching trades pass you by and then being mad at you. Damn, why didn't I take that? Why didn't I take action there? Because you weren't reading. Because you weren't assessing. Because you didn't put yourself in a position to compete and manage your trade according to the proper risk profile of that trade. Aggressive trade, aggressive management. Okay? Does this trade have a higher possibility of working out in my favor now than it did before? Yes. Can this trade still fail me? Yes. Because until this high is taken out, this market, okay, has an expectation of going lower, of breaking this low. Okay? But the market has shifted here from bearish to bullish. That's in line with our short-term expectation. Is the strength there to take it? Maybe. Maybe not. These areas are complex and bring the most losses. Why? Because the market's unsure. It's determined to change directions. Okay? But there's a fight between short-term and long-term order flow here. No side's taking ownership. Short-term expectation, new structure high. Long-term order flow, new structure low. Those are the two expectations that you have. Okay? We put ourselves in a position to compete on the short term. We got taken out because price just never followed through. Okay? Price showed us an intent to not allow the long-term expectation to play out. Okay, so we put ourselves in a position to compete for that after we were taken out. If I would have not been taken out, would I still be in this trade short? Yes. But I had a very clear decision here to take price higher That decision was reconfirmed here. So I put myself in a position to compete. Is it a high risk trade? Yes. It is what it is, guys. Very ugly. Very ugly candle for us. Sorry if you hear any crackling noise. I'm chewing ice. It's a bad habit I have. And this is frustrating. We're in a ranging market, and it sucks. Especially short-term motor flow ranging. That's even worse. Okay? I'm looking here. Is my stop properly placed? I'm very close to the 786. Price could test that again. Okay. I mean, I see the price tested it once and twice and pulled away. So, you know, I'm not a fan of increasing my risk. But at the same time, I have to be realistic. I have to be realistic. So if I get taken out here, I'll probably end up with 3 pips of profit for the day. Pretty much a scratch day. But it is what it is. It wasn't a losing day. It's a scratch day. But we haven't lost yet. We'll see what ends up happening here. Let's cheer for the Bulls. Come on, Bulls. This is a level that they've always come in on. They came in here. They definitely came in here. So let's see if we can get that again. Overall, major weakness. where there shouldn't have been weakness. So we'll see if they pick up on that weakness and rally. Not great. This is not good for our trade. This is part of the trade management. That's why I want you guys to see the patience and how there's no emotion into the trade management. We're not going to get excited about this candle because it hasn't closed yet. But this is a great show of strength. This is something that we definitely want to see. We got about 10 ticks before it closes. This candle means business. This is the turn that we wanted to see. This is the turn that we possibly expected off of the short term. Took a little longer to materialize. Now let's see if the bulls can carry. They definitely showed will, intent, commitment, and ability. Now let's see if they can show sustainability. I told you earlier that we needed to see a close above the 18 mark. We'll see if we can achieve that. That would be great. I would like to see another candle like this. Just go ahead and just close above the 22. That would be fantastic for our position. I know that you guys wanted to see more of the trade management side of things and how I process the order flow. You're seeing both today. That's why this video is kind of dragged on. Unfortunately, the price action has only put us in 3 trades today. This one's started out grim, but it's looking better now. As we had to realign ourselves with the strength of the market, even though it was against order flow, even though it was against long-term expectations. Sometimes these trades work out. We can now definitely remove some of that risk as there is structure here. You know what? I'm not going to remove my risk. I'll remove some risk. Make sure I don't lose more than 5. Okay. The market has spoken, has broken short-term structure here. Now let's see if we can break longer term structure here. It has to get past this. It tried to, failed, produce a higher low. Let's see if we can trade above and stay above this line. That would be fantastic. The bulls should produce a bull candle here. That would be expectation. However, due to the structure, we would expect a weak. We could expect a weak bear candle, even though that's not the expectation. But we could get a weak bear candle here. We definitely want to see the bulls just say, no, we're here. We're not going to allow it. We're taking this show. If we can get past this, the next level of resistance is up here. This is where price found resistance. Let's just hope the bulls can keep the momentum going. Take price higher. There's about 38 ticks left in this candle. Okay, so my expectation was met. A weak bear candle or a bull candle. I couldn't help but notice the will to push price lower. That's the interaction of price with this resistance area. But the fact that they could not hold the 50% of the candle made me feel good about that. Now the bulls need to carry here. It's important for the bulls to carry here. We know the initial response is to go higher. They need to achieve. Price needs to break above here. We'll take this line and we'll move it down just for visual reference. That's our goal. Our goal is a break above this. New structure high. ABC to the upside here. Okay? That's what we need. Once price interacts with this high, we're going to remove risk altogether from our trade. We're going to lock in the 2 pips that we lost on the previous trade, which gets us back to 17 for the day. Right now we're up 12, 13. ABC to the upside. Let's go, baby. Take it. Let's show everybody how we read this. $44 ticks left on the candle here. 32, 31, 30. Counters down here. You can see prices were up another 15, 16, 17.
Target filled.
Target filled. Yes, baby. Fantastic. Okay. Let me wrap things up here. I'm going to quit for the day. I'm happy, satisfied. We traded for 2 hours. We made some decent money today. Entrance here. Target hit here. 22 pips. Green. Let's make that green. Okay, what does that look like on the P&L counter? Boom. Account performance, $1,850 for today. We had a $100 loss on our 2 pip loss. For the week, it wasn't a great week. nonetheless, first week of the year, made $4,400. Decent, pays the bills, and actually Monday was almost nothing. Right? Most of this was done, as you can see, from Tuesday. I didn't really trade Monday. I think I broke even on Monday, but $4,400 in 4 days. About $1,000 a day average. But that's not what it's about. I want to show you this because this is the byproduct of taking high probability trades, managing your trades properly, being in control of your emotions, and trading at a high level. Okay? We knew long-term order flow was down. Okay? We were quick to take profit here. Look what happened as we took profit. Now, an ABC to the upside completed. Okay? This is now a situation where, you know, we could find price realigning itself with the long term. Okay, 50%. We're still bearish overall. Okay, but why did I decide to go long here? Price should have had no issues making a new structure low. It should not have fluttered around. Once price started doing this, I knew I needed to be aggressive in my trade management. My expectation was likely going to fail. I adjusted my stop. I knew I didn't want to tolerate that. Okay, and then when I was taken out, I had the opportunity to realign myself with short-term order flow, knowing that there was a very high probability that I would achieve a new structural high and get a deeper correction out of this. I did that. I realigned myself. I took along for a short-term trade to the upside. That is how we trade. This is how we become profitable. This is how we absorb small losses like this and turn a regular day or mediocre day into a great day. Okay, overall we had 39 pips minus 2. We had 37 pips altogether, and we got to be happy. So that's it. That's about 2 hours exactly. I hope this video has value. I hope you learned a lot from it. I hope to catch your comments on the thread. And as always, good trading, guys.